going to bring my buddy Dan Geltrude into this. Geltrude & Companies, the founder. He's also an accountant by training. And I joke with him that he's very, very cheap. But I mean that in a good way because he looks for alternatives around these inflationary pressures. Dan, they're harder to find these days, though, right?
Yeah, they certainly are, Neil, because everything literally is going up. So any place you look, and a lot of what we've been talking about here is trying to time things. And that's very difficult, whether you're talking about the real estate market or whether you're talking about the stock market, to try to time what's going to happen next. Very, very difficult. So I think overall, anybody and an investor in any type of market really has to look at the long-term investment, because trends will come and go.
But what's long-term? Dan, what is
say,
long-term to you?
Long-term for me is out further than a year.
Okay.
Neil.
Because long-term at my age is like breakfast next week. But I want, Dan, you to respond to this. This is Joseph from Florida, of course, Katrina's neck of the woods, on just where all of this is going.
Hi, Neil. Question for you. What strategies should retirees take with their investments with the raging inflation that's taking place and expected to take place over the next few years? Thanks.
In other words, all of that run-up could be compromised if this run-up gains traction. What do you tell them, Dan?
Well, look, I go back to when you're looking at inflation, the concept here is that prices are going to continue to go up. You need to be very careful that when you are investing in something that has a fixed return, you are technically losing money in an inflationary period because everything is going up in price. However, your earnings on investments are not going up. So where do people go? People want to go into equities in the stock market. But I'm going to tell you this, Neil, what we need to be careful about in this inflation is how the Fed reacts with the possibility of raising interest rates. Because if we start to go down that path, I think it's going to have a very negative impact on the stock market. So now you could have equities coming down in value, and now people are really stuck in a tough situation for investing.
Katrina, what does that mean for real estate if that happened?
Well, you know, if interest rates go up, I think it's definitely going to slow down the market. I think more inventory will come on the market. You know, to his question, too, I've just seen that most people have accumulated a lot of their wealth through real estate. So, you know, looking back, I wish I had bought more properties in my 20s, you know, now that I'm 41. And so I just realized that real estate proves time and time again to be able to hedge against inflation, to be able to, and with rents right now, as I mentioned, you know, the expenses can be passed on to the tenant and rent prices are continuing to go up. So I think, you know, coupled with what Dan's saying, I think also investing in real estate is a very smart move towards retirement.
You know, and Dan, this is a question for you. A lot of people want to shield themselves from this inflationary spiral. You can buy protection for that. Fred from Colorado has this question for you.
With the cost of the goods and services we use every day seeming to go up almost weekly, along with the fact that the Fed has told us inflation may be here a bit longer than they expected, would you think that Treasury inflation-protected securities, better known as TIPS, would be a good investment at this time?
What do you think, Dan?
Yeah, actually, TIPS are exactly designed for this. So how they work, Neil, is basically you're buying this investment, you're buying these bonds, and what happens is as the CPI raises, as inflation goes up, you actually have your investment rate, or your interest rate rather, adjust, so you actually get more money to keep up with inflation. So it is a really good hedge on investment. However, that doesn't mean that you should simply go into those TIP investments and say, okay, now I'm protected. It should be part of your investment strategy.
Super quick, guys. Dan, I'll ask you this first. The experience we had in the 70s with runaway inflation and all of that, do you see that happening again?
I don't see it happening, Neil, to the extent that we experienced in the 70s. Before my time, I know that was right in your younger years.
That's fine.
But for me, I think that I think I think that we're heading in that direction. Are we going to see 18% interest rates? That I don't see, Neil.
Did I ever tell you the story? My wife and I got our first mortgage at 13.5%. Thought we were geniuses. Oh, I did, about 1,000 times. Katrina, you're so young. I have ties older than you. So your perspective on whether we could revisit that 70s experience.
Well, I don't think I agree with Dan. I don't think it'll get to that point. And I do remember, Neil, you telling me the story of you and your wife, having 13%, my parents did as well, interest. So I think we're all a little bit spoiled when we say interest rates are going to go up to 4% and we're all holding our breath. Money is still relatively cheap, and we're really blessed to have interest rates, so low for such a long period of time. So will it affect the real estate market? Yes, of course, things will slow down, but things cannot continue at this pace forever.
All right, because I was worried that Dan might break out the leisure suit and then all bets are off. Guys, I want to thank you both very, very much. Now something that